This is Rick Rule for Rule Investment Media and the Rule Classroom. Speakers of the 2025 Rule Natural Resources Investment Symposium, Boca Raton, Florida, or wherever you are via live stream. Takes place July 7 through 11. Couple things you need to know about the conference. First of all, we're going to give you more information in 4 days than you can possibly absorb. To that end, the recordings of the entire proceedings will be available for you whether you attended live or live stream, and you'll need them. The second thing is that every single exhibitor and every single speaker is being interviewed before the conference so that you can study the exhibitors before you get to the conference and allocate your time and capital at the conference better. Note that no exhibitor is allowed on our conference floor that isn't owned in the accounts of the conference sponsors, the current exhibitor included. Today, I have the very good fortune of interviewing a friend of long standing, Randy Smallwood, somebody who's made me look smart as an investor, which has sometimes been a challenge. Randy, we noted talking off the air that you started at the predecessor to Wheaton 30 years ago. So one could say that you've worked 3 decades to be an overnight success. If you could tell us something about Randy Smallwood before we go into talking about Wheaton.
Yeah, sure, Rick, and thanks for the opportunity. And it doesn't take much to make you look smart. You've got a pretty good track record, Rick. I've always admired you, so really honored to be here on the stage with you, and look forward to joining you down in Florida. Yeah, the background. I'm a geological engineer by background, and I started off as an exploration geologist in Canada, banging rocks, looking for prospects, and one of the first companies that I had success with was a little company called Wheaton River Minerals, which was clearly at that point a very, very small little startup. And they'd picked up a promising property up in the northern part of Canada that within a couple of months after joining them, and as you say, in 3 decades, I got reminded just recently that it was August 15th of 1995 that I signed on to be an employee. I was doing some contract work with them beforehand, but that's close to 30 years ago now. And yeah, we had great success taking that original Wheaton River and making it a small scale success, but it was enough of an success that it attracted some pretty high profile individuals. Ian Telford joined us in 2000 and really took that into Gold Corp and into great, at one point the largest gold company in the world. Part of that was creating what is now called Wheaton Precious Metals. At that time, it was Silver Wheaton back in 2004. And created the streaming business model, which is a model that supplies capital to the mining industry. And so we've had great success building that company. I shifted over from the original Wheaton River / Gold Corp over to Silver Wheaton and now Wheaton Precious Metals in 2007, and have been the CEO since 2011. And it's been an incredible journey. I'm incredibly fortunate to have a good, strong team around me. And when I sit and look at what we've achieved and where we are right now, streaming has definitely become mainstream as a source of capital in the mining industry. And so it's been an incredible journey, Rick.
Let's talk a little tiny bit about the journey in financial parlance. When I first bought Wheaton River, I think the mine was depleted, but the company was selling at a discount to the cash in the treasury. If my memory serves me correctly, the market capitalization at that point in time was $20 million.
Yep.
That became two companies, part of which is now Newmont, and the other part is Wheaton Precious Metals. From that $20 million base, what is the market capitalization of Wheaton River today, roughly?
Well, Wheaton Precious
Pardon me,
Metals.
Wheaton Precious Metals. I'm sorry, Wheaton Precious Metals.
Yeah, Wheaton Precious Metals is now over $40 billion US, and this is just the streaming spinout of the original Wheaton River, which turned into Gold Corp. And so when you sit and think about the value that we've created from that original $20 million, and you were correct, it was an exhausted mine with cash on hand. We had great exploration success very quickly as soon as I signed on as part of the exploration team. We, within 6 months, uncovered a couple of very profitable, small scale, but very profitable gold deposits, and that was the start of it. We started at about a $20 million market cap, and it's been as I said, an incredible journey up to, I'd say cumulatively when you put together everything else. There's a number of other companies that spun out of the whole. When I look at New Gold itself is also a spin out of the old Gold Corp. I'd say Even Orla, which is a market darling right now, is something that was sort of created by moving assets out into a separate entity and letting them go forward. And so it's tens, if not getting close to close to 100 billion in value created out of that original $20 million venture way back in 1995.
A couple lessons stand out. I think in extractive industries, you can't have a financial success without good technical expertise. Where the rubber meets the road is not making egregious mistakes. And I think the importance of your technical background and your ability to provide adult supervision, technical supervision, to people who are making financial decisions is important. Could you talk a bit about the intersection?
I'm going to quote my, probably one of the most important mentors in my entire career, which is Ian Telfer. And when Ian came in to take over as the CEO of Wheaton River back in 2000, I loved the way he introduced me into the overall, corporate development role. At that time, I was still the mine manager and project manager up at the Golden Bear mine, and I was definitely out looking at project evaluations. But we also had a mine we had to run. And he wanted to bring me into the project evaluation side. And he says, I've got no problem raising money. He says, what I need is I need someone to tell me. And he says, it's not so much tell me which mines to buy. He says, the most important thing is to tell me which mines not to buy. He says, never, ever forget the importance of that. And it is something that I have never forgotten in terms of celebrating our no's, celebrating the ones that we don't move forward with. And it's interesting because, we've always had great success here at Wheaton Precious Metals and finding some great partnerships, some great mines, some great assets to invest into. The technical side is so important. And every once in a while, you close a big deal, you go to celebrate that. But one of the first things I always do at those little celebrations with our staff, with our team internally here is say, let's celebrate the fact that we didn't invest into this one and we didn't invest into that one. Let's never forget how important it is to be able to stay away from the challenged projects in the world. Make sure that what we're doing makes sense. And so,
Now, Randy, I want you to stop sending those projects to me, those bad ones. So, Randy, I want to talk. I want you to describe briefly, because we have a lot to talk about, what a stream is. You're a streaming company. What is a stream? Describe the financial instrument to me.
Well, we get binned into the royalty space, but it's so much more powerful than a royalty. A royalty is just a slice of the capital. And depending on the type of royalties, we've seen some big news here recently on NPIs, which doesn't even protect you from cost risk. But most royalties are NSRs, and it's basically a slice of the revenue that comes from the mine itself as it goes forward. Pretty boring. Just send me the check every 3 months and so on. And you might look at it kind of nice, but a stream has got so much more value built into it. It's first off, it's a contractual partnership. So it's based on a relationship between we, the streaming company, and the operating company, where we supply capital up front for a portion of the metal, and we can be selective about what metal it is that comes to us. And that's one of the reasons that keeps us as a pure precious metals company. We don't have any of the byproducts that come with a net smelter return royalty payment. We also, don't invest into any other products. We're focused solely on precious metals, and I think that really differentiates us in the peer group. We are pure gold and pure silver, and a little bit of palladium and just a smidgen of cobalt. But essentially pure precious metals. And what it allows us to do, though, is we're plucking those precious metals from, the bulk of our production actually comes from copper mines, and it's non-core byproduct gold production from copper mines and I would say to a lesser extent, silver from lead zinc mines that we are purchasing. And we purchase it for a set price up front, plus a prescribed upon, agreed upon production payment as the metal gets delivered to us. And so we deliver so much more than a typical royalty in the sense that we're focused on a specific commodity, which is precious metals. And that's why you're investing into a company like ours, is because you want that access. But we also have that base production payment, which gives us leverage. And so, it's got so many more advantages than the typical royalty. The other aspect from the operating perspective is that streams are much more favorably structured. They deliver more value on a per ounce basis than a royalty. And it really comes down to the fact that a stream, because it is a portion of the metal that gets delivered, it's got much more favorable tax treatment than the passive aspects of a royalty agreement. And so it does deliver more value on a per ounce basis to the operators. And that's why the traditional royalty companies have really turned into streaming companies. The bulk of their revenue does come from streams now. And so it's a good, strong business model. It's been copied. We've been continuing to refine it. I think our last deal with Montage was probably one of the best structured deals we've ever done. They're very happy. We're very happy. It's the only way to do business, is to make sure that both sides win. And we just think that there's a whole new set of opportunities for us to continue growing our business. And it's really the advantage from an investor's perspective, much lower risk profile, but we still deliver all the exploration upside, the expansion potential, the leverage with the base production payment, so much more at such a low risk profile. It makes it pretty attractive for investors.
The value proposition, I guess, for investors isolating the stream has to do with the fact that after the initial investment and after the production payment, you're not exposed to operating risk, and you're not exposed to sustaining capital costs. After those payments, your gross is your net.
Yeah,
which is
no, that's one of the key things is we don't have any. In fact, one of the things I would argue the mining industry suffers from is those inflationary pressures that provide some support for gold and for precious metals and drive that commodity price up, also drive the costs up. But in a streaming model, we don't suffer from that. Our costs are fixed, and so we don't have that exposure. And it is a huge advantage. We deliver that return, that increase in commodity prices comes right back to our cash flows.
The part of the value proposition, I think, is the capital markets arbitrage between cash flow generated on base metals production, silver, lead, zinc, copper, and the price paid in the market for isolated precious metals revenues. Your cash flow has been valued by the market at premiums, 12, 15, 18 times free cash flow, while the copper producers and the zinc producers and the lead producers are more like 5 to 7. So it absolutely makes sense to isolate that precious metals revenue. That allows you, and I'd like you to talk about this a little bit, to pay a disproportionate share of the development expense relative to the portion of the revenue that you get, and structure a win-win transaction. Perhaps you could talk about that part of the franchise.
Well, I'm going to expand on the Montage agreement that we just completed. Montage has got the Koné project in Côte d'Ivoire in Africa, and we are supplying 100% of the capital required to build that mine. We take away 20% of the revenue at the start, and as they get to a certain level, it'll drop down to 10% and then 5%. But it allows them to move forward without project debt. They're a single asset development company, and it really came down to the cost of capital for them. And so even in the gold space, I hate to say it, the disparage, it works really well taking precious metals from base metal projects just because of the way they trade. Fortunately, the current environment right now, we're not seeing a lot of investment into the base metal space. We need a stronger copper price if we're going to see copper projects going forward. We need a stronger lead zinc pricing if we're going to see lead zinc projects going forward. So our current opportunity set is in the gold space, and we have seen this applied very well in the gold space. It's such an attractive source of capital for even single asset gold companies to move forward. But Rick, you're right. When it comes to the base metal side, that's where the biggest arbitrage is, the biggest benefit is. And I go back to our flagship asset, Salobo, where we supplied essentially close to 80% of the startup capital to build that mine. And we take away about 20% of the revenue from that mine. It was originally 15, but gold has outperformed copper, so it's about 20% of the revenue from that mine. The advantage, of course, to the Vale shareholders is that they only contributed about 20% of the capital to get that mine built. And their return on that invested capital, their EBITDA was 2 times that invested capital just last year from this mine. And so from an operator's perspective, from the shareholders of the operating company's perspective, the stream is incredibly beneficial in terms of improving that return on their invested capital, which is what every company should be trying to do, is improve that return. And so a stream is an excellent way to improve that. And that's one of the reasons why there's not a single mine financing anywhere in the world where streaming isn't considered a part of the capital structure that is going to be required, even as I just gave with the Montage, even for gold streams off of gold mines. The fundamentals are just strong, but the arbitrage is even stronger, as you say, in the base metal space when you see that difference in valuation and bringing it into our company, which is a precious metals company. And the other advantage we get from that, Rick, is that we have such an incredible resource life because these big base metal projects need such huge resources to justify the upfront capital to build them. They are very, very capital intensive. So they need 40, 50, 60 years of reserves and resources in front. And we get that benefit. We bring that reserve and resource life in. Combined reserves and resources in our company, 60 years. You'd show me another precious metals company that's got 60 years of reserves and resources in front of it. There's no one. And that long reserve and resource life is a hidden advantage that we are bringing and delivering to our shareholders also. So yeah, it's a real opportunity there.
Our viewers need to understand that when your net present value expires after 8 years, you have another net present value period that's the same coming right after it. But I want to focus on one more thing before I let you get on with your life. And that's this. You're not a mining company. You're a finance company, in effect. And it turns out, I've learned after 50 years, that not mining is easier than mining. I walked through Newmont not too long ago, and there was floor after floor after floor of brilliant earth scientists and finance people that the shareholders were paying for. I've been through your office too. And
We get 2
I have to
floors.
say that looking at your balance sheet and income statement for 20 years, which I've done, I'm struck by the extraordinary efficiency of your general and administrative expense relative to either assets under management or cash flow. Perhaps you could talk about the value add in royalty and streaming with regards to G&A that if you were an asset manager would be substantially lower than your peer group.
Yeah, no, it's you're right. We've got a total of, in fact, I just got corrected. We now have 44 employees. We went up from 42, but that's because we have 2 people on maternity leave, and we had to bring in 2, and somehow we count the people on maternity leave and their replacements, and so we're up to 44. It's a 5% increase, but yeah, no, it's a nice small tight team. But getting back to it, like over 40% of our team is technically focused. So they're made up of people that have geological or engineering or metallurgical or social science backgrounds to help us make better decisions. And it just reinforces how important that is. The most important thing is making sure you have the right expertise. The guys, the team. It's not the guys and girls that are pushing, that have the background in this space and push this forward. And so there are some challenges in the streaming space that I think need to be recognized. When we make an original investment into an asset, we have to ride that wave. There's no getting off of it. There's not really a liquid market for selling these streams, and if you want to sell them, it's usually because something's gone wrong, right? And so it's an interesting aspect in terms of how we help our partners be stronger, because we're always looking for ways to help deliver value beyond the original streaming agreement. Because we have an overlying mantra in our company: the stronger our partners are, the stronger we are. And I think it's something that really differentiates Wheaton. We put a lot of focus into partnership and trying to build that strength. And so, even within this small, tight group that we have, there's a lot of skill set that is required. And we're all very passionate about what we're doing, but we're having fun at the same time. It's, I think it's one of the more important aspects of this is that we shouldn't be here unless we're passionate about what we're doing. And that's one of the things I will say about our team is incredibly passionate about the objective.
I want our listeners to ponder on the success that you've enjoyed over 30 years with this business model. Ponder on the corporate culture that suggests that a transaction should be win-win. And ponder, too, the general and administrative efficiency, where your Canadian dollar market cap per employee approaches $1 billion. That's truly astonishing.
Actually, it's a U.S. dollar market cap.
US dollar. My apologies.
Yeah, I think 43 or 44 billion US. We're well over 55 billion Canadian. So So yeah, it's a U.S. dollar one. No,
An
it is.
astonishing set of circumstances. Randy, I know you have a hard stop immediately, and in honor of the money that you have made me over the last 30 years, uh, I will adhere to that hard stop. I just want to thank you for years of effort on behalf of shareholders, for your perseverance, your tenacity, particularly your success. And I want to thank you for the fact that you have supported our seminar for probably 20 of those 30 years. It's been a delight to have you with us, and we're absolutely honored to have you with us again. Thank you.
Rick, always a pleasure. Always admired what you contribute to this industry, and none of this would happen without our shareholders and their support. And so you have been a long supporter of ours and a very vocal supporter of ours, which definitely there's been, as any cyclical industry, there's been times when that support has been really, really important. And so a sincere thank you for your efforts, and I look forward to continuing to join you in well, this time Boca Raton. And on other events. So always enjoy working with you, Rick.
Thank you, sir.